What's going on, fellow classmates? It's Zach and Will Scudder here to teach you today about how banks make money
Money multipliers, and the Federal Reserve.
and the Federal Reserve. All right, so I'm sharing my screen, and we're gonna go ahead and get started with today's lesson. So, how do banks make money? I'm gonna start. Oh, that doesn't work. So, we're gonna start by
We're already 30 seconds in, and we haven't even started.
drawing a bank. So, this is our bank. So, how does a bank make money? So, a bank makes money in two ways. They lend money and make money on interest. So, here you have your average Joe. And so, they want money to buy a house. So, the bank says, okay, we'll give you some money, but you have to pay us back over time, and then we're going to charge you a certain percentage of interest, and that's the money we get for the money that we lent you. And the banks can also lend money or invest money in government assets. So this can be like a bond. So like a bank's like, hey, the U.S. government, I'll buy these bonds, and they're gonna mature, and I'm gonna make a return on them. So that's basically the two main ways banks make money.
All right, what's up, everyone? So I'm going to be talking about the money multiplier and the Federal Reserve. So firstly, before we start talking about the money multiplier, we need to understand two different things. So we need to understand that there's commercial banks and there's the central bank. Oh my goodness. Basically, a commercial bank. It would be like if we were to go to Lowe's Foods. There's the Bank of America, like place there. So that would be a commercial bank. So just that building, like that branch of as it is. And our central bank would be the whole entire Bank of America, like central money supply, I guess you could say. So the money multiplier, which is what we're supposed to highlight, is basically is the ratio of how much money or how many loans the Federal Reserve can give, and the max amount of money you could have in the central bank, if that makes any sense. So it's actually a ratio. That's why it's called a multiplier. So it's like given a certain amount of commercial banks, which I'll circle here again. This is really hard to write on, so my apologies. So given a certain amount of commercial banks, I'll probably use my words for most of this. Given a certain amount of commercial banks, how many loans can they give out to maximize whatever amount is going to be in the central bank or the Federal Reserve? Yes. So, okay, all right, so now I'm going to talk about the Federal Reserve. The Federal Reserve was founded on December 23rd, 1913. Basically, the Federal Reserve has a network of 12 Federal Reserve banks and 24 branches, all under the Board of Governors for the God. And basically, a little bit broader. So I listed out the 5 main jobs of the Federal Reserve. That kind of runs the country. So the first job of the Federal Reserve is conducting monetary policy, which is what I wrote right here. So essentially, they control what can and cannot happen with money. Like monetary policy, that's pretty straightforward. Number 2, they promote financial system stability. So the whole system under the Federal Reserve is stable because of the Federal Reserve's policies listed in number 1. So everything that happens is stable and doesn't really have that much risk of exploding or anything weird like that. Not literally exploding, but anything weird like that. So that was number 2. And let's see if I can see number 3 here. Oh gosh, okay. Nice, all right. So number 3 is they supervise and regulate financial institutions and activities. So financial institutions would be like kind of like how I listed earlier, like local banks and stuff like that. So they supervise as well. So regulation, right here that I put. Yikes, that was a bad circle. Number 4, fostering payment and settlement system safety and efficiency. So in this, like with transactions online, or not online, but on the computer, they basically make sure that all of that happens very safely. So number 4. And lastly, but not leastly, promoting consumer protection and community development. Basically another just straightforward, like pushing things through in terms of money. Thank you for watching our video.
Peace, guys. Thanks. What's up? We're back.
Comment and subscribe.
Like, comment, subscribe. Thanks for watching.
Hit the like buttons.